Good evening, everyone. Welcome to our Let's Learn Futures webinar series. This webinar series is brought to you by Bursa Malaysia and managed by our company Excellent. Now, today we have a very interesting title, name it as Trading Psychology, Mental Fitness for Traders. I saw some of you say hi to me, yes. This evening, we are going to have a 90-minute session. The first 60 minutes will be presented by our speaker for today, CY Saw, and the final 30 minutes will be a Q&A session. My name is Ting Ting. I'm the moderator for this particular session. So before I start, just please make sure that you can hear my voice, you can see my slides. If you can hear my voice, you can see my slides, can you please just type in the chat box, yes. Some of you already know what is the question that I'm going to ask, right? Okay, very good. You can click on the emoticon as well if you want. Now, so you are ready to go. So we're going to start our session for this evening. But before that, please off your video, because if you're going to on your video, it's going to take up a lot of bandwidth. It might affect your learning environment. So please off your video so that you have a better learning process. Now, for your, I heard some echo, is it? I'm not quite sure, is it my side or is it any other places or not? But it's okay, let me continue. Now, along the way, while Siwa is doing his presentation, if you have any question, you can click on the Q&A box and ask your question and send it to all co-hosts. Please do not send your question in the chat box because we might not be able to pick up your question. So remember, click on the Q&A box, and you no need to wait until the end of the session. Along the way, if you have any question, you can start to send your question in the Q&A box. Now, not only today's session, you should know, for those who already participated in our previous session, you should know that every Tuesday, we are going to have different topic covered by different speaker in different languages. So upcoming in November, every Tuesday, we're going to have different topics. This will be the last 3 topics for the year of 2023. So you can see that for those who can understand Mandarin, you can join the session on 7th of November. This one is about counter trend trading topics. On 21st of November, it will be a trend trading strategies. So this will be conducted in English, and we have our last topic for the year, which will be conducted on 28th of November. So this will be a Malay topic. So this will be the pengajaran penting daripada pakar pasaran niaga hadapan yang terkemuka. So they are going to look at different so-called as speakers for this particular futures market itself. So if you're interested, please scan the QR code and you can register accordingly. Alternatively, in the chat box, there will be a link. You can click on the link to join. Please register first so that you will get the update for your session itself. Now, this particular, not only the webinar series, we also have an online workshop. This online workshop is not suitable for all participants. This online workshop is mainly for those who are really seriously getting yourself started in futures trading. Then only you participate in this particular session, because this online workshop is only limited to first 50 online attendees. So for those who really want to get yourself started in futures trading, I strongly urge you to go and join the session. There are 2 sessions provided by Bursa Malaysia, online workshop 1 and also online workshop 2. So for those who do not have background in futures, you would like to kickstart futures trading, you can join any of the sessions. So the upcoming Malay session will be this Saturday, and the final session in English will be next month, 2nd of December. Again, you can scan the QR code or else you can click on the link itself. Now, the star of this evening, I believe many of you you should be very, very familiar with CY. So CY basically is the lead trainers for Excellent, and he's also currently the CMT chartered holders, and he has more than 10 years of trading experience. And he's also a certified HLD corp trainer and also the NLP itself. He's a performance coach with extensive experience in coaching individuals with performance improvement, behavioral change, self-empowerment, and also personal breakthrough. So this topic is definitely for him. So without further ado, let me pass it over to you, CY.
Good evening, everyone, and thank you for joining me today. I hope you are all doing well and you are ready to learn some valuable insights about the soft skill aspect of trading, which is the trading psychology. Now, trading is not just about looking at the numbers and charts, right? It's about the human element that often determines our success. Now, today, I'm going to share with you some valuable insights into the psychology of trading and the mental fitness required for you to become a successful trader. We all know that in trading, having the right knowledge and understanding of the market is crucial. Profitable trading strategies and systems are essential. But what often gets overlooked is the human side of trading, which is equally, if not more important. And imagine this, if you have a toolbox, and in that toolbox, you have all the technical tools, strategies, and market knowledge necessary for trading. But what good is having all of those tools if your mindset is actually not in the right place, right? Trading, it's in fact a unique journey that requires not just financial intelligence, but also our emotional intelligence as well. It is not just about making the right trades, it's about managing your emotion, your fears, as well as having the necessary discipline. So as you continue your trading journey, remember that it is not just about knowing the market or having a winning strategies. It's about knowing yourself, managing your emotions, and building the mental fitness required to thrive in the world of trading. So in the next hour, I will be covering several topics related to trading psychology so that you will gain some insights and general idea of what is trading psychology all about and what are the invisible obstacles that we can't see that you need to overcome and break through. So in order for you to take your trading to the next level. So let's get started. Before we begin, a quick disclaimer. This presentation is for educational purposes only, and it's intended to give you a broad level understanding of trading concepts. That being said, I hope that today's session will help you widen your horizon and expand your knowledge in trading. Whether you're a beginner or an experienced trader, there is always something new for us to discover, and I'm confident that you will find value in the insights I will be sharing with you today. As Ting Ting has already mentioned earlier, you can just call me CY. First and foremost, my professional background lies in the field of finance and trading, as I have dedicated quite a significant portion of my career in understanding the complexities of how the financial market works and the dynamic of trading. However, my expertise extends beyond traditional finance. I'm also a trained in psychology, specifically in psychotherapy and coaching. And I'm particularly passionate about a niche aspect known as trading psychology, because the psychology aspect of trading, it's about understanding how our emotions, our bias, as well as decision-making patterns influence our trading actions and behavior, and it ultimately affects our trading performance. So over the years, I have worked with traders of all levels, from beginners to experienced professionals, helping them to develop the skills and mindsets needed to succeed in uh, the market. So one of the key lessons I discovered throughout the years of trading is that trading is not just about looking at the numbers in the screen. It's also not so much about the charts. It's about the person behind those numbers, which is you. So your trading psychology is the foundation which your trading success is actually built upon. So without further ado, let's dive into today's session. I will be dividing today's content into 4 key topics. The first topic, understanding trading psychology. I will start with the foundation first, so you can have the foundation understanding about what trading psychology is all about. Second topic, it's about the importance of trading discipline. Here, I'm going to share with you why is it so hard for us to maintain a good discipline in trading. Thirdly, I will share with you how to manage emotions in our trading, and this is very important. I believe oftentimes you might be hearing about greed and fear in trading, but it's actually more than that. I'm going to reveal to you in this topic. And lastly, your strengths and weaknesses as a trader. If you do not know your strengths and weaknesses, by default, you actually put yourself at a very disadvantaged position, uh, and you can fail very easily. So it's important for you to be able to identify your strengths and weaknesses. So are you ready to take your futures trading to the next level or not? If you are ready, you can type in yes in the chat box. Now, before we begin, I would like to ask you a quick question. When you hear the word trading psychology, what are the things or keywords that comes into your mind? What do you think about trading psychology is? You can type in whatever keywords or answers that come into your mind. So don't worry, there is no right and wrong answer. Just type in whatever keywords that comes into your mind or things that you know about trading psychology. And later on, I'm going to give you a comprehensive definition and what trading psychology is all about. So I see some of you mentioned emotions, brain, winning mindset, mind game. Some of you mentioned revenge. Okay, I see. That's interesting. FOMO, greed, trust in your strategy, and not to follow your emotions. All of you are actually quite correct to a certain extent, because all of those are actually pieces that are, one of the small pieces and components that is included in our trading psychology. But trading psychology is actually a bigger things that consist a wide area of us, where it actually influence our thinking, behavior, as well as our emotion. So let's get into it to the first topic. Now, let's start with the first foundation. There are some terminologies and words you need to follow, and so that you will have a better understanding and clearer picture about what trading psychology is all about. Oftentimes, we talk about physical health and physical fitness, right? And how important it is to have a healthy diet, taking good care of your physical body so that you can have your physical engine can have a good performance over the long run. Now, how about in trading? Do you have the necessary mental fitness for trading? But first, you need to understand what is trading psychology. Then you will later understand what are the components you need to build the necessary mental fitness in trading. Now, the topic may be a little bit dry and abstract, so I'm going to do my best to simplify things and avoid using technical jargons as much as possible. It may be your first time listening, so you may get confused a little bit, but it's all right. It's a common learning process where everyone will actually go through. And as you familiarize with the words and content, it will just get easier and easier for you to understand, all right? So first and foremost about trading psychology, we need to understand what is psychology first. Psychology includes the study of our mind, your cognitive process, your thinking process, how you process information. It also includes your knowledge, your mindset, and your thinking patterns. Another component about psychology is the study of our behavior, things that you do physically. It can be any actions or activities. For example, you walk, you move, you eat, your habits. All of those are behaviors. It also includes you sitting there right now, listening to this webinar. It's also a form of behavior. And last thing is emotions, how you feel about the internal events inside you as well as the external world, how you respond to whatever things that happens inside you as well as the external environment. So to put it simple words is that the field of psychology is the study about these three main components, which is think, feel, as well as you do. How you think, how you feel, and what are the things that you do. Very simple, right? Isn't it? So trading psychology is about what happens to your psychology when you are performing the activity of trading and investing. To make it simple, trading psychology is about the study of these three components related to improving your trading performance. Any of these three components can directly or indirectly affect your trading performance. And these three components will definitely result into a different kind of trading performance. So now that you have already understand what is trading psychology, let's take a look what is trading psychology when it comes to trading. So as I have already mentioned, trading psychology is about the psychology when you're doing the activity of trading and even investing. So again, it's the same model. First thing is our mind, your cognitive and your thinking process. It's about how you think and analyze the market. In other words, it's your operating system, okay, inside your brain, the software in your brain. So what do you need here is that you need to have a good trading mindset, of course. You also need to have knowledge about the market, technical analysis, fundamental analysis. You need to develop trading strategy and more. How you analyze the market, whether your research process is good or not, how you make trading decisions, whether your decision making is logical or rational, or is it influenced by emotions and biasness. So all of these are considered as our mind component, our thinking aspect. The next thing about trading psychology, the second component, which is our behaviors, are all the things that you do in trading. So it includes going through your trading checklist, your trading plan, recording down your trading journal, doing your trading execution. Do you pull the trigger when you get the signal? Do you do the necessary cut loss when your target is hit? So all of these are trading behaviors. And lastly, which is your emotion component, how you feel, the emotions that affect your mind as well as your behavior. So emotions are the responses you feel when you trade the market, how you feel when you trade, how you feel when you have positions in your hand, how you feel when you are having a profit or even losses. The emotions that are running through you when you process information or when you read the news. How do you think and feel when you read about the news that is happening in the Middle East? So here are the things that these three key components, think, feel, do in trading psychology. You can actually go in deeper for each section if you're interested in it. One very important thing you need to know about psychology here is that each component here, our think, feel, and do, they are actually not standalone, and they are not separate parts itself, because all of them are actually linked together. Your thinking patterns influence your emotion and behaviors. Your emotions influence your decision-making process and behaviors in trading. So all of them are interrelated and it links together. Now, it's important for you to understand your trading psychology. If you don't know your psychology, you may be doing things blindly without having any conscious awareness. When you know your psychology means you know your thinking process, you are aware of your emotions as well as your behaviors. You can actually re-engineer the whole process of trading so that you can see what went wrong and where and what specific areas you can improve in your trading. Now let's look at the end results here, which is your trading performance. Making profit, making money, and having positive results, which is everybody wants, right? You want to have positive results in your trading. And now let's talk about the framework of a successful trader, where a consistently profitable trader have positive results over the long run, so that you are able to model what are the success strategies. So here I'm going to break trading into three phases, which is before trading, during trading, as well as after trading, so that you can see what are the things you need to do in trading in each and every one of the process. So the first thing is, of course, before you trade, you need to have the necessary knowledge. This is where you continuously learn and build your knowledge about trading and understanding the market fundamentals. technical analysis, any knowledge that helps you in trading. When you have your knowledge, and that is where you begin to build and develop your trading strategies and systems based on your knowledge and understanding about the market. The key point here is that understanding the trading strategy that you use. Once you understand your strategy well, eventually and automatically you have already developed a good trading psychology. So with the knowledge and the strategy you have, you analyze the market and you trade. You make your trading decisions and you take some positions. And after you place an order and make a trading position, you will be dealing with the outcomes of your trading decision, whether making money or losing money. So successful and profitable traders actually they know how to deal with any outcomes effectively. While those who are not quite successful yet, or maybe you're just on the way of becoming successful, they you might not know how to deal with those outcomes effectively yet because you may not have learned how to cope up with these situations when you lose money, or maybe you haven't found effective ways how to deal with it that works for you yet, correct? So here, as you can see, throughout the whole process, it involves your psychology, it involves your mind, your behavior, and your emotions. Remember, this is actually a general framework, and this framework explains the whole process of your trading. Each and every one of us go through the same process, and with this framework, it's easier for you to identify which part of your trading process went wrong so that you can clearly identify the problem and find solutions to solve it. Now that you have already understand what is trading psychology, now let's go into trading discipline. All of us knows that trading discipline is important. Before trading, you know what you should do, what you must do, but when it comes to actual practice, now things getting to start to get out of track. So here I'm going to share with you why is it so hard for us to maintain good discipline in trading. But before that, if you know the answer or if you would like to share, can you let me know what are the trading discipline challenges you are currently facing right now, so that each and our friend and audiences here knows that you are not just facing the same problem only, because when it comes to trading discipline challenges, there are some recurring problems or things that each and every one of us are facing. So just I give you about 10 to 20 seconds to share your challenges in trading that you face throughout your trading. So I see some of you have already shared in the chat box here. Some overthinking, some having challenges in cutting losses, knowing when to buy when candle rapidly go green, thinking too much, cut loss average down, taking profit too quickly, or trauma of having repeated losses. All right, fine. In fact, these are some of the challenges that all of us faces. In fact, all of these challenges can be categorized into some or few in these categories. Just now, you have shared some of your trading journeys challenges. In fact, it can boil down to a few of these categories. And are you able to find any of your challenges in any of these category? It can fall into maybe 1, 2, or 3 categories, or even more categories here. Now, the key thing here is that once you know which category it falls into, you can find your solutions to solve it. However, the challenge here is that even if you found your solutions, I can reasonably assume that it is still challenging for you to stick to the solutions. Am I right? Why? Because of discipline. Now, oftentimes when we mention about discipline, whether is it losing money or making less money, we all always point towards, oh, I don't have enough discipline. It is because I am not disciplined enough. But what does discipline really mean? Because discipline is actually such an abstract word, right? So let's get into define a little bit clearer about what discipline is. and why most people won't stick to their trading rules. In fact, not just rules, right? You can actually fill in the blanks here. It is you can people may not stick to their trading rules, their trading strategies, their trading plan. You can also change the whole thing. Why most people won't stick to their, for example, New Year's resolution. In fact, all of them deals with psychology, and it's the same thing. So it can fall into a few key factors, which I'm going to share later. Why you don't follow or stick to your rules is that number one is that you may have lack of understanding of your trading strategies. So, of course, when mentioning about trading, you start from a blank paper, right? So it's either you copy other people's strategy without having any understanding, or you just only understand those strategies at surface level only. So when you don't understand the strategy well enough, you do not know how to solve the problem when you hit obstacles. Then that is why trading seems to become difficult, and you give up sticking to the trading plan. You start to develop your own things that is not tested yet. The next reason is that it might not, you don't stick to your trading plan because those plans might seem not important or even not significant. And it might be not meaningful for you as well. So, which is why, follow or not, also never mind. You can read a lot of books about, trading and investing, attending lots of seminars and courses, listen to many wise words or even wisdom quotes from, those legendary traders. For example, like let your profit run, cut your losses short. You can agree with all of those quotes and wisdom and still don't following it, because all of those uh, quotes and wisdoms, it seems like not significant and not meaningful to you yet. So which is why you don't follow it. And lastly, of course, is because of overconfidence. You overestimate yourself. You may believe that even without following the existing trading rules or the trading plan, you can still manage your trade very well. Even if you have a good trading strategy, sometimes you might overestimate or put on too high hopes on those strategy, whereby you overestimate that your strategy's ability to perform very well and underestimate its limitations. So one thing that it's important for you to know is that every trading strategy has its own advantages and disadvantages. They have their own pros and cons. So question is that you need to ask yourself is that, do you know your strategy's limitations? When does it work and when does it not work? Now, of course, when we mention about psychology, your psychology influence your decision making. And there is a word called psychological, and I believe you're quite familiar with it, with these words. And this word can be split into another two words. The first word, which is psycho, which is your three components in psychology: your mind, emotion, as well as behavior. And the second word that we can split into is the logical. Of course, the root word is logic. We are supposed to be rational and logical when it comes to trading behavior by doing the right things. However, when emotion kicks in, we tend to be irrational. We no longer behave logically. So, what do? You tend to overwrite and override your trading plan. Sounds familiar? So even when you have existing trading plan or trading strategy, you tend to override and override it during trading. Override means the action where you replace your existing rule with a new rule. You replace existing strategy with a new strategy during trading. When you override, you erase the original plan. And most of the time, this new strategy is actually not tested. You are doing something very new, something that you initially did not plan for, and you override. Override means you directly apply the new things in your trading without testing. Now, let me give you an example. For example, it's like when you make an illegal U-turn on the road. So yes, you know that illegal U-turn is actually wrong, because it may endanger other road users. But you come out with some other logic at that point in time, because if you were to do that U-turn, it can be fast, it can save you time, and it's also convenient. So you override the existing rule by making the illegal U-turn. Am I right? So here you can see that logic is actually logical to you only. You know that it's wrong, but you will still do it anyway. Back to trading is that, for example, you want to cover your losses. So you may have a trading behavior, for example. You may double down your position with a hope to cover trading losses even faster. So yes, it may sound logical to you, but it's a wrong thing to do because it's a dangerous and the risk is actually high. Now, of course, trading discipline begins with following your own trading plan. And having trading plan means having a clear, defined trading rules and strategy. If your strategy and rules are not clear, it's difficult for you to follow anything. And trading, I would like to describe is that trading plan is like your your law for yourself to follow. If you keep trying to bend the rules and the plan, guess what is the consequences? You definitely face the penalty from the market, right? And the consequences is, as you may have already guessed, is actually losing money from the market. Therefore, you must develop your trading plan so that you have something to follow with discipline. Now, before you trade, of course, first thing, you must have your trading plan and how to have a trading plan that you would religiously stick with, a trading plan that you can follow. Let me share with you these few general rules for you to develop as well as design your trading plan. When you follow these few general rules, it's easier for you to stick to your trading plan. Now, firstly, of course, you need to understand your trading plan well. If you don't understand it well, you just copy without understanding, you will definitely attempt to ban all of those rules because it may not be important or significant to you. Okay. Secondly, you need to make sure that those plan is important and meaningful personally to you, not just because whomever guru says it's important and you should follow this, follow that. It has to be personally important and meaningful to you. And lastly, make sure it's a plan that you can follow. Make your plan or your trading plan easily implementable for you. If your trading plan is too complicated, too complex, or even too many rules, too many things to look at, or even too many indicators, it will actually consume too much of your energy and time for you to follow and analyze the market. Sounds familiar? And this is where your brain automatically, shut down itself by default. And this is where there's no rule for you to follow anymore. So you may be doing things freestyle. So when you do freestyle, this is where you are doing things that is out of track from your trading plan. Sounds familiar? So if this is very familiar uh, to you, you can type in 1 in the chat box so that you understand having a trading plan. It is not just having rules and strategies only. It has to be clear, it has to be meaningful and important to you, and most importantly, a plan that you can follow. If it is a plan that you cannot follow, try to simplify it as much as possible, okay, so that it's easy for you to execute. Now, the third topic, now that you have already developed your plan, that is where you begin to trade. And that's where emotions would come in. So it's important for you to manage your emotions effectively in trading. Now, type in your answer in the chat box. What are the common emotions you face in trading? Let me know what are the common emotions that you face in trading, because sometimes people may get confused about emotions as well as thinking. Okay, so share us with us what is your emotions that you face in trading, whether is it emotions that you like or emotions that you don't like in the chat box. I'll wait for your answer to come in. What are the common emotions that you face in trading? All right, I see enter too early. Okay, enter too early is a behavior, it's not emotions. Excited, yes. Anxiety is an emotion. Joy is an emotion. Fear is an emotion. Fear, self-trust. Okay. In fact, when it comes to trading psychology, as I mentioned, emotions is actually it goes beyond fear and greed. There are many emotions that is happening around us. Sometimes later I'm going to share with you even good emotions. If a good emotions that is too strong, it can be dangerous to our trading as well. Now, generally, there are two types of energy level of emotions. Okay, probably you can guess it already. Two types of energy level of emotions. One is a high energy emotions, and another is actually low energy emotion. For high energy emotion, for example, you may have mania or feeling euphoria. In other words, you feel high uh, in trading. Okay, this is of course it's drug free. You are not taking any drugs. You are not under any medication. But when you feel high, it's usually when you are making money in trading. So this is where you have reached a stage of euphoria. You feel high. You feel confident. And of course, for low energy emotions is when you feel anxiety, you feel stress, as well as depression. Most of the time, anxiety and stress is very common, whereas for depression is actually for those who have uh, consecutively facing losses or maybe suffering huge losses. Okay, but let me get this straight: is that anxiety and stress is very, very common in trading for everyone. The most important thing is that uh, you need to be able to manage your anxiety as well as your stress level. So I'm going to explain further in the next few slides. Now, the first thing is how do we deal with our winning emotions? This is where you are likely to experience to have high energy emotions, to feel euphoria. Here, I'm going to highlight some of many symptoms or signs when you express these high emotions in terms of thinking, feelings, as well as your behavior. Most of the time, when you win or when you make money, you will feel high. Here are a few of the symptoms and signs. So, in terms of thinking and feeling, your mood is definitely elevated. Your self-esteem will be inflated. You may be thinking is that nothing can go wrong, nothing is impossible. I finally figured it out. The success formula of trading. I can immediately quit my job and jump straight right into full-time trading. I am confidence. Uh, I think about profit. I think about good things and less emphasis on risk as well as and money management. Uh, so in other words, you to uh, you know have a either very bullish about the market or very bearish about the market, where you may be over trading. This is where when you have a lot of inflated self-esteem or elevated mood, you might be having a lot of delusional thinking. Your thinking is already corrupted, or a lot of illogical thinking comes in. So when you are feeling and thinking some or many of these things, let's see what are the behaviors that you might be doing. It's very common for traders to do that. Of course, the a few of the things is that over leverage, you might trade bigger, you double down or trade at a very big position. You might be over trading, you trade more than you necessary. You are taking more trades whereby for example, your trading plan just only tells you to do 5 trades, but you're doing 10 trades or more. You're trading more than necessary. You're being more aggressive in your trading. So aggressive means you are actually trading out of your trading plan already. Okay, so which is why we would label it as aggressive. And of course, when you make money, you will be thinking about how to spend your profit, how to spend your money. What am I going to do tonight? What am I going to upgrade in my house? Should I get a new phone? Should I get a new car or buy a new house? And worse is that people might be committing into extra financial commitment. So in other words, especially during good markets when a person makes a lot of money. Of course, in stock market is actually when the time is very bullish, but in futures market, of course, you can trade both directions. Strong bull and strong bear, you may be able to make money in futures market. So what I want to emphasize is that when you dealing with winning emotions is also very equally important as much as losing emotions, because when a person keeps making money too much, our self-esteem might be inflated, our ego might be starting to bloated up. So this is where we might be a little bit overconfident about our ability. We might be overconfident about our skills. We might be also overconfident that we are able to generate consistent profitable results in the market without having a good risk management. So this is where people are, when a person is too overconfident, too much positive in trading. So these are the few symptoms or signs that you might be doing in the market. And in fact, logically speaking, you do know that it's very dangerous if you were to committing extra financial commitments if you are not ready to do so. So these are how we deal with our winning emotions. How about losing emotions? Now, of course, when I mention about losing emotions, it is not just only when you lose money. Just now, winning emotions is about when you have a high energy of emotions. So here I am going to share with you more about the low energy aspect of emotions. What are the symptoms and signs in terms of thinking and feeling, as well as what are the behaviors that we do when we have low level of emotions, especially when we lose. Of course, firstly, when we lose money, it affects our confidence. It's getting lesser. And sometimes when you keep losing, or even when you don't have positions in the market, you may analyze too much about the market. You have analysis paralysis. This is where you are getting extreme conservative. You fear that you might be losing money, even though there is a signal generated already. You begin to hesitate and doubt about yourself. When you lose money or losing opportunity, so this is where you might be having difficulty in concentrating or focusing in your daily life task. So this is where you might lose focus or easily get distracted, and this is where you will have a lot of symptoms of anxiety, stress, as well as depression. Now, as I've already mentioned, anxiety and stress, each and everyone will have it. I have it as well, even though uh, throughout my whole each and every day in trading. But the most important thing about stress and anxiety here is that do not let stress and anxiety affect your judgment. Do not let stress and anxiety influence your thinking process, because it's important for you to have a clear mind, because stress and anxiety is very common. However, for a depression, I think this is where a person lose a lot of money, and then those money might be meaningful and impact them some way or another that impacts their daily lives. In terms of behavior, what a person do when they have low energy, or which means the anxiety, stress, as well as depression level that is out of manageable zone. So when you have losing emotions, again, you can see some of the things, some of a few behaviors, it is exactly the same as the winning emotions. You might have over leverage behavior, trading too big, over trading as well as being more aggressive. But these three behaviors, it's a little bit the intention is different from winning emotions. Winning emotions is you want to make even more. But when you lose money, you may still over leverage, over trade, and even being more aggressive. Because why? You want to cover your losses as quickly as possible. So this is where even your daily lives, especially if you have your own career other than trading, you have your own occupation, your full-time job, your daily life activities are actually affected. You are unable to focus, you are easily distracted, you keep thinking about the market. So once your daily life is affected, sometimes you have a low mood swing, easily agitated, lose temper, and many of other things that would negatively impact your daily life. So dealing with low mood or losing emotions is also important as well. So once you're able to detect, or most importantly is aware or detect your any of these symptoms in your trading, whether is it winning emotions and losing emotions, once you're able to detect that, please learn how to stick to your trading discipline, stick back to your trading plan, so that, because trading plan, it's like your rule, it's like your law, so that whether you feel happy or not happy, good emotion or not or bad emotion, you still need to stick to the law, right? Because once you break your rule, once you bend the rule, you will face negative consequences, because sooner or later it is about time when negative consequences may hit you. Now, speaking of emotions, the emotions that will affect you most is actually when you have trading position. Because why? You have stakes in the market. So you need to learn how to deal with it. When you have stake in the market, immediately you will see your portfolio, your money in your portfolio fluctuates. So you need to learn how to deal with it. If you notice emotions starting to get out of your hand, if you notice emotions start to cloud your judgment, or you're starting to have a lot of bias, or even which I've already shared with you some of many symptoms earlier, what you can do is, number one, try to reduce your trading position, or number two is that you can actually clear out all of your trading positions, so that when you have no trading positions, it's easier for you to have an objective mind. You can think logically. Your mind is clear. Why? Because when you have no trading positions, yes, you might have emotion as well, but in this case, it's easier for you to have a clear mind. Why? uh, because most beginner traders oftentimes have fluctuating emotions when they have zero position. How many of you here, when you don't have positions, you also feel a lot of emotions going in you? You can type in yes in the chat box. Let us know you are not just the only one, because I believe that even when you don't trade, right, you may have a lot of emotions running in you. There's no position, nothing can affect you, correct? And I remember just now, some of you had shared in the chat box is that the emotions that affect you mostly is actually the fear of missing out. In other words, is what we call as the FOMO, right? The fear of missing out opportunities. So this is where, irregardless of whether you are, especially if you are beginner traders, you need to learn to be comfortable without having any positions in the market. Okay, because when you don't have any position, your money is still with you, not with the market. You do not have stake in the market. So, which is why you don't have to worry about anything. The market is not going to uh, steal or even rob your money, because your money is still with you. So always remember this, is that the one general rule is, when you have emotions in the market, as most of the time is, especially you have trading position, try to reduce or clear all of your positions, so that you are able to think clearly, you are able to think rationally and logically. All right, so how do we manage our emotions effectively? First, of course, as I've already mentioned, very simple. First thing, before you manage your emotions, firstly, we need to have the necessary knowledge in trading. And what that means is that you need to first build your trading plan and have a good trading system. Okay, your trading strategies has to be clear. You need to understand it thoroughly inside and out. You need to know when does it work, when does it not work. backtest it so that you know the pros and the cons of your trading plan and your trading system. Next is that when you do your trade, after you do your trade, please write down your trading journal, because never ever trust your memory, right? Because if I were to ask you what did you eat last Tuesday night, probably you might not even remember, right? So it is very, very important to journal it down, so that oftentimes our memory can always trick us, correct? Because why, we might have a lot of ego defense mechanism inside us to protect us from feeling hurt. We do not want to make ourselves look or even sound stupid. So when you put your trading journal right down in black and white, you write down your trades, you write down how you think and feel about your trades. Your mind can't trick you anymore, because you have already journaled it down black and white, and it's clear. So this is where you have the opportunity to do this third thing, which is your self-reflection. You are able to analyze your trade. You are able to see what you do it correctly, or what are the things that you do wrongly. Now, when you are able to do all of these three things, I believe 80% of your emotions are well managed already. Okay, so it's important for you to manage your emotions through these three steps first. Now, I understand there are a lot of emotional management tips or techniques or strategies for you. For example, like doing sports, mindfulness training, breathing, going have an exercise. Those are the things. Yes, it might help you, but those are not really directly help you in your trading, because even when, for example, when you have a high stake in the market, when you're holding a huge position in the market, of course, you can go exercise to reduce your stress. You can do meditation or even yoga to reduce your stress. But the fact is that you are still having a high position. So when you are having high position, it may be meaning that you are trading too big already, which means you might not be following your trading plan. So which is why managing your emotions effectively actually comes back to your behavior, in terms of whether you have the discipline, whether to whether you understand your trading plan well, whether your trading plan is meaningful and important for you and easily followed by you. So when you are able to stick to these three steps, build your trading plan and system, write down your trading journal, and then do some self-reflection, I believe 80% of your emotions are well managed. So try your best to do these three steps. And the last topic is that it's about your strengths and weaknesses as a trader. So if you do not know your strength and weaknesses, by default, I have already mentioned, you are putting yourself at a disadvantaged position for you to fail easily. So it's important for you to be able to identify your strengths and weaknesses. And I believe, as one of the famous quote from The Art of War is that you need to know yourself, you need to know your enemy, which is the market, so that you can actually having a victory each and every time when you go for war. So this same thing goes with trading as well. You need to know your strengths and weaknesses, and you also need to understand the market. Now, a question for you is that, are you fast or are you slow? So in other words, what I'm referring to is that, are you a fast person or a slow person? Can you let me know where in the chat box, whether would you consider yourself as a fast person, or would you consider yourself as a slow person generally? Okay, I see majority mentioned that you are would classify yourself as a slow person. Any fast person here in the audience? So far, nobody mentioned fast. Maybe you're fast in some aspect, but if in your life generally, if you are making slow decisions, when you do things a bit slow, you take your time, then probably very likely you're actually a slow person. Now, how does being fast or slow got to do with your trading. Actually, this is about our personality. Now, what do I mean by fast and slow is that let's break it down to a more specific thing. Are you a fast thinker or a slow thinker? Think about this. And the next thing is that are you fast in making decision or are you slow in making decision? So here are four things, right? In fact, there you can be, having a combination with, you can be a fast thinker and slow in making decision. You can also be a slow thinker, but when you decide, you can be very fast. So here we can see that there are many, in fact, there are many different personality types of trader. Okay, and the general type would be this. I would make it simple for you. Fast and slow. These two types would be good enough for you to identify where is your potential, where is your strength and weaknesses as a trader. Okay, I see somebody mentioned too fast is also a problem. That's right, because being fast, it's one of a thinking style. Different thinking styles have different characteristics. Each has their strengths and weaknesses. So we will see further in the next slide. Here you can actually take a quick screenshot or take your mobile phone to take a screenshot at this slide. And I see there's quite some time here. So I'm going to highlight some of a few important ones. So let's say if you are a fast person. So some of the advantages here is that you can process information fast, you think fast, you do things fast, and you can make quick decisions. And of course, as you may already know, is that the challenges here is that you may not be process information thoroughly enough. You may be making impulsive decisions. You may not be thinking things through or looking alternatives enough. In other words, when you make impulsive decisions, you are not looking at managing risk. You're not looking at your blind spots. So this is where impulsive decision making is that because you're thinking fast, you can skip switching decisions very fast also, right? So for the challenge for fast thinkers is that especially when you are playing at a slow pace trading, okay, if you're a fast thinker and if you are doing, for example, longer time frame of trading, playing a slow pace in trading can be a challenge, a big challenge for your patient, because you want things fast, right? And you want to see results immediately. So if you're a fast thinker, it's better for you to actually use your strength to play at a market that suits you most, rather than playing a market that is rather than playing to your weakness. All right. And on contrary, if you are a slow thinker, good thing is that you take time to think and you don't jump straight right into the water. You look at your options, you weigh some of your options, your pros and cons. And the challenge, of course, for you as a slow thinker is that you may be thinking too much, you may be having analysis paralysis. Uh, you hesitate to execute your trade. So trading short-term time frame for especially for slow thinker, right, can be also a very challenging thing for you. Any slow thinkers here who is actually trading slow time frame? I believe it's actually a very stressful situation, right? Because if you're a slow thinker and trading at a very fast pace, short time frame, you may not have sufficient time to think or even process information. So which is why for slow thinker generally is that the game that is more suitable for you is a game that has sufficient time for you to think and process information so that you can take your time to think things properly. So as you can see here, both types of thinkers have their strengths and weaknesses. Always remember this, when it comes to trading, play to your strength and find ways to manage your weaknesses, because your strength is actually your main operating system, right? So whether you like it or not, whether you think it consciously, directly indirectly you will always automatically doing things that that goes along with your personality most. So always when you trade, find a strategy that actually plays to your strength and find ways to manage your weaknesses, because your greatest strength, as you may already know, is that it can be your blind spot. It can also be your greatest weaknesses as well. So when you are able to identify your strength, look at the flip side of the coin as well. Okay, it can be your own weakness that you need to learn how to overcome. For example, if you are a fast thinker, maybe you need to slow things a little bit down, consider some other options so that you are able to think things thoroughly, carefully before you make decisions. Similarly, for slow thinker, if you hesitate too much or thinking too much, what you can do is that good thing is that you think a lot. Bad thing is that if your analysis holds you back from taking the necessary execution or action, uh, for both fast thinkers and slow thinkers, is that one thing can help you solve is, can you make a guess? What are the things that can help you solve your trading issue, which is your trading plan, your trading strategies, as well as your trading systems. Because trading plan, your trading systems, and trading strategy, these are the things that is going to govern your trading. If you do not know what to follow, uh, irregardless of your personality, always stick to your trading plan, your trading system, because these are the things that is going to slow you down or help you to make a good trading decision over the long run. When you are able to solve these issues, you will see improvements in your trading decision, and you'll also see improvement in your trading results. Now that I've already shared with you the importance of having a good trading discipline, you have already know what is psychology, what are the things in your trading psychology that affects your trading performance. And you also know whether if you are fast or slow thinker, whether you are fast or slow in making decision. Now, it is important for you to think about this for yourself, okay? After this webinar, or even for this week, think for yourself is that, link it back to your personality and your lifestyle. You need to find a trading style that suits your personality and lifestyle. And of course, this takes time, not months. It actually takes years for you to discover the trading style that actually suits you most. For example, you can be a fast thinker or a slow thinker. If you're a fast thinker, of course, you may already know that a shorter time frame might suit you suit you most, because shorter time frame would more suitable for you. Because if fast thinker trading slow time frame, you can't see results immediately. So this is where once you get bored, you want to do things differently. So this is where you do things out of your trading plan. So fast thinker always stick to shorter time frame, and of course slower thinker is best to stick to a slightly longer time frame that suits that is able to give you time for you to think things clearly, for you sufficient time for you to analyze the market. Similarly, shorter time frame, for example, if you're doing intraday, shorter time frame, it will definitely needs you to make a quick decision making, because of course, intraday trading, it means you need to have a lot of high trading frequency and also a lot of decision making. So if you're slow thinker, definitely intraday trading might not be suitable for you, because intraday trading requires a quick decision making. You are putting yourself in a wrong position to trade. Okay, are you able to see that relationship? So it's important, and it takes time for you to discover which of the time frame and trading style suits you best. So in other words, what I mean is that you need to be patient with yourself, especially for the first 3 to 5 years of trading. For beginner traders, the first 3 to 5 years will be definitely trading challenging for you, because you might be facing losses. You do not know what to do in the market. You might be experiencing big wins, and then suddenly you lose a lot of money. For the first 3 to 5 years, it can be really, really challenging. And for some of you, it's okay if you haven't achieved consistent good performance yet. So don't beat yourself up too hard, because for the first 3 to 5 years, it's about exploring what works for you and what does not work for you. What are the things that you should do in trading that suits you best, and what are the things that you should avoid. Okay, when it comes to trading, there are a lot of in other words, what we call as foolish thing or stupid things that we should actually do less. When you do less of the things that you are not supposed to do, indirectly you will be seeing progress in your trading performance. All right, so it's okay. Don't beat yourself too up, because you are actually on your way to get better bit by bit, one step at a time. So take your time. Start from small, trading as small as you could, so that you are able to survive the market longer and find your trading style that suits your personality and your lifestyle. Right? So that's it for today. Let me summarize today's key takeaway point. So firstly, of course, understanding your own psychology is very important. Your psychology consists of three components: how you think, how you behave, and how you feel. You need to be able to aware of these three key components. And of course, winning in trading, it starts from discipline. It also means you need to have a clear, structured trading plan. Effectively coping up with your emotion is actually a skills. So I understand that a lot of you emphasize a lot of finding the right trading strategies or even trading system in the market. However, do also develop the other side of a soft skill, which is how do you cope with your emotion when you are feeling bad or even when you're feeling good. It's an important thing for a trader as well, because when you have a good emotional coping skills, you are able to sustain in the trading a little bit longer. And lastly, do take some time to explore your strength as well as your weakness in trading short time. Be patient with yourself, so that you are able to develop your trading style based on your strength and weaknesses. And of course, lastly, as you continue your trading journey, remember that it is not just about the market or having winning trading strategies. It's about knowing yourself, manage your emotions, build the mental fitness required for you to thrive in the trading world. And I encourage you to take these insights to heart and invest some effort and time in your own trading psychology. And remember that becoming a successful trader, it's not just about what you do in the market, but eventually it's also about who you slowly become along the way in the process. You are also becoming better as a person, a more disciplined person as a person, and also as a disciplined trader along the way. So that's it. I pass it back to Ting Ting.
Thank you very much for a very interesting and very informative presentation regarding this topic about trading psychology, because trading psychology is a very important topic for all traders. It doesn't matter you are traders or you are investors. Unavoidably, you must understand this particular topic. Now, before we proceed with the feedback form, if you have any question, you can start to submit your question in the Q&A box. So what you need to do is you can click on the Q&A button and you type in your question in any of the languages and send it to all co-hosts. Please remember to send it to all co-hosts. If not, I will not be able to see your question. Now, while waiting for the Q&A, can you please help me to take less than 30 seconds, maybe 30 seconds to a minute, to provide us with your feedback? Because I believe today's session helps you a lot, especially in terms of your trading. So can you please spare us, let's say, for example, 30 seconds to a minute, a very short feedback form? Please scan this QR code, or else in the chat box, our admin already provided the link. You can click on the link to provide us with your feedback. So I'm going to give you a very short 30 seconds to a minute while you are preparing for your Q&A. Please provide us with your feedback. Last 20 seconds. Okay, time's up. For those who already submitted, we really appreciated your feedback. For those who not yet finished, don't worry, you can continue to provide us with your feedback. Even you can do it at the end of the session. Now, for those who cannot finish it, you can continue to do it. Then we are going to go into the Q&A first. Then subsequently, once you finish your feedback form, if you have any question, you can submit your question in the Q&A box. Now, before I start, maybe Siwa, can you just do a very quick summary about how can we strengthen in terms of trading psychology?
Okay, to strengthen our trading psychology, very simple. As you already know, trading psychology, it's about the three key components. So the first one would be our mind. It includes our knowledge, our thinking patterns, our how we process information, our emotion, as well as our behavior. So most of the time when we refer to trading psychology, or discipline issues, right? We always mention about emotion and trading behavior, but most of the people miss out is that is the mind part, which is not, it's not just only mindset, but it also comes from your knowledge. Because I strongly believe is that strengthening or improving on your knowledge in terms of trading, it's the primary thing for you to actually improve on your trading psychology. Because you can be there will be a time when uh, you can be good in your skills, you can also be good in your emotions, but if your thinking pattern or your thinking process is incorrect, so this is where you may be doing a lot of wrong judgment, wrong decision making. So oftentimes we can say is that, you know, when it comes to trading, ultimately, the easier thing that we can judge is actually from our trading plan, your trading strategies, as well as your trading system. To enhance or strengthen our trading psychology, first thing first that you need is develop a good trading plan and trading strategies and system.
Okay, so basically you need to understand and aware exactly about the thing feel do, these three components, then this is one of the ways that you can strengthen in terms of your trading psychologies. Now, we have a very common question asked by a few of them. Any good or simple books that you can suggest in terms of this particular topic or not, in terms of trading psychology?
Okay, some of a few good trading psychology book is I think there's a latest newer version. I think it's for the name is called Trading Psychology for Dummy. So the Dummy series, of course, is the most easier to understand one. The name is called Trading Psychology for Dummy. So you can actually begin with that, and some of a few notable authors that write on the topic on trading psychology is Brad Steenbarger, Alexander Elder, Jack Schrager. So all of these books that you can actually read about in trading psychology. I believe you can just Google it out, list of books in trading psychology. Those are a few good books. And the challenge in reading trading psychology books is that some of the situation might not be relevant to you. So it's good for you to customize and tailored those situations so that you are able to fit to your own personal situation.
Okay, very good. The next question, a bit specific, I think is related to one of the scenarios. He said that if there's a clear opportunity for a win, but it will go against our strategies, should we proceed or not? This is the first part. Then he's saying that assume the opportunity is obvious and backed by our knowledge.
Okay, so if there is opportunity for win and going against your strategy, in fact, I think it's a logical. I mean, thinking about it, if you can see a clear opportunity, definitely it's actually would not go against your strategy because you can see back to trading psychology is that it has to be logical. So if you are able to see clear opportunity, it means it has to mean is that it is actually going in favor to your strategy. So if it is against your strategy, then it is clearly that it is not a good opportunity. So as long as the trade, the most importantly, as we have already all know, is that in order to survive in the market for a long run, is that we would want to take trades that is in favor with our trading plan and our trading strategies. That is the rule of thumb.
Okay, the next one is any practice that we can do to strengthen our psychology or not?
Okay, any practice to strengthen our psychology? Few things that you can do. Firstly is to develop your trading strategies and your trading system. Have a clear trading plan that you can follow. Please do not have a complicated trading plan because it can be, as I've already mentioned, it can be too many things, too complex and very hard to execute. So when it becomes hard to execute, our mind eventually, begins to shut down and we no longer follow with those plan anymore. So first things first is that develop your trading plan and trading strategies. And by that, what it also means is that you need to develop the necessary knowledge as well as skills in order to develop your trading plan and strategies.
Okay, very good. We are going to wait for a further question, but meanwhile, let me do a quick wrap up. Then later, if we have further question, then we are going to get CY to answer. Now, not only today's session, as I mentioned to you, if for those who this is the first time that you attended our Let's Learn Futures webinar series, every Tuesday we're going to have different topics, different language covered by different speakers. So upcoming, let's say for example, next Tuesday we are going to have a topics in Mandarin. Then followed by 21st of November, we are going to have an English topic about mastering trend trading strategies in futures market. So if any of the topics that you're interested, you can scan this QR code and register accordingly. Once you register, then you'll get a reminder, etc. Now, in the chat box, there's a link provided by our admin. You can click on the link to register, or else you can save it first. You can register at a later stage. So this will be the last 3 sessions for this particular year, especially in 2023. Now, once you click on the link, you're going to see is our events calendar. You select on those webinars on Tuesday. Then you're going to see those upcoming webinars on Tuesday itself. Then you pick the session that you're going to attend and register accordingly. Now, not only webinars, Bursa Malaysia also provide Let's Learn Futures online workshop. Now, this online workshop is specifically catered for beginners. Those beginners who want to excel in your futures trading, or those who are really seriously getting started in futures trading, these 2 topics or these 2 online workshop is definitely for you. So we're going to cover from A until Z. So you will really understand how to get yourself started in futures trading, because I believe some of you don't even really understand what is futures trading. So grab this opportunity to attend this online workshop. The upcoming session will be a Malay session. It will be this Saturday. So it will be divided into 2 workshops. The first workshop will be panduan lengkap untuk pedagang baru dalam pasaran niaga hadapan dan simulasi. Then followed by the workshop number 2 is related to trading plan. So please register, scan the QR code, or else you can click on the link in the chat box. And for online workshop, we are going to limit to first 50 online attendees, unlike webinars, because this we are going to be very serious in terms of the content itself. So we really understand how to get yourself started in futures trading. So once you click on the link, again, you look at Saturday itself, then you're going to see that we have 2 different sessions. You can click on the link to register accordingly. Now, this Bursa Marketplace, I believe many of you know, this particular session is for you to understand how do you use this DTS, Derivative Trading Simulator, for you to simulate before you enter the actual market, meaning that you can use those so-called as not your real money to try or test the market before you access to the actual market. So what you can do is you can access to bursamarketplace.com/mkt/DTS. Now, the final part is about Bursa Academy. Bursa Academy is a one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. So if you like to access, you can access to bursaacademy.bursamarketplace.com, or else you can scan this QR code. So let me check on any further question. If not, we are going to end the session. In the Q&A box, I don't see any weekdays online for futures. For online workshop, we do not have it. We only have it on during weekends. I'm so sorry. Some of the session we are going to conduct on Saturday. Some of the session we are going to conduct on Sunday. But I think for the remaining 2 classes, it's only remaining for Saturday only. So maybe you need to wait for next year itself. So we're going to end our session for today. Before I end, first of all, thanks for CY presentation. Very informative, and I believe by now all of you really understand how to master trading psychology itself. And for those who attended this particular session, with thanks for your participation, and stay safe. Good night. Bye-bye.